So that's it. We're wrapping up the month of May for the 500 to £10,000 challenge. Healthy return this month, 21.98% return. Really good win rate as well, sitting at 83.3. Risking 2% a trade. It's the only way I'm going to be able to grow this account sustainably without taking unreasonable risks. Because £500, you're not making any money on these trades whatsoever. Let's take a look at the actual monetary amount that I've made. £13.29 there, £17.77. I've lost 12 quid there. Really good trade here at 73, but even all of this, considering we're in a cost of living crisis here in the UK, I could barely buy a fucking Nando's with that, to be honest with you. Took me and my fiance out to Nando's the other day and it cost me like nearly 65 quid, so I was probably down actually that day from going out. But the aim of this account, I'm not going to be making any withdrawals. I'm going to be compounding this all the way from 500 to £10,000. See here, we're sitting at £616 at the moment. Reason why I'm doing this is because I came over some old screenshots which I'll go over just now. Let me pull those up. So this is some screenshots back in October 2015 when I first started getting my foot into the live markets with some £250 to £500 accounts. I used to work in an office for a council. Barely made any money at all there, to be honest with you. It's an apprenticeship. I think I was earning about £500 a month at that stage of my life. I think I was about 19 years old here, now 30 going grey because I've been in the markets for so long that it's just hugged me. But with this chart here, I had no strategies whatsoever. Back in 2015, nobody gave their strategies out over YouTube. There was no trading content whatsoever apart from maybe the Bulls on Wall Street guys. I can't remember who hosts that now, but that's what motivated me to dip my foot into the pool, even though it wasn't stocks. I was trading Forex, and although this is the FTSE, about 8 a.m. in the morning, 8:41 I should say, I'd be leaving work shortly after this. I used to wake up at 8 a.m. in the morning, trades the open for an hour, of the FTSE, the DAX, the US markets, even though that's pre-market. Just used to find the opening candle, 8 a.m. Literally see a green candle, buy it. If I saw a red candle at the open, I'd sell it. And that's pretty much the nature of my trading back then. I'm just going to pull up this second screenshot as well. Now this screenshot here, like, this was IG trading back in the day. Like, there was no regulations in regards to margin. So with this like £250 account, look at these sizes here. I was able to place a fucking 30 lots there, 10 lots. That's after I lost a bit of money by the looks of it. 25 quid, 25 lots, lost 148.75. Now my ideology behind what I was doing here, I was clueless. I was placing trades on my phone whilst I was at work, with some markets in front of me. If it looked like it was going to go up, I'd buy some. If it looked like it was going to go down, I would sell some. There was no targets, there was no risk management. That £148.75 loss, I just shit my pants. I used to just hold my trades until they used to go into a profit, and sometimes I'd be holding them full of stress all day whilst I was in the office at work. I remember one time that my very first trade, it was a copper trade, very first deposit into this IG account. I was well happy. I've been placed about 2 or 3 days worth of demo trades prior to that. I was trading copper then at the time as well, and saw there was just a bunch of red candles. It must have been going down, so of course I put my short entry in. About an hour and a half later, about 9:30, 10 o'clock, checked my mobile and I was down £180. I felt sick to my stomach. So depressed and sick that I actually left work that day, told them that I didn't feel well, went home, had 2 more days off work, trying to trade myself out of this drawdown on a 1 5-minute chart, just scalping my way out of it. Also digging myself a much deeper hole. I didn't get out of that. I just went back to work a couple of days later feeling absolutely miserable because of it. But that was the reason why I'm doing this now. What would I do different if I knew what I know now back then with those small accounts? Because the downfall of these prop firms, they're dropping left, right, and centre, and now people are left in the dark. They don't know how sustainable this is. They're going to most likely have to revert back to these smaller personal accounts that everybody used to trade once back in the day, before we had access to all this capital at our fingertips. But thing to keep in mind with these prop firms as well, all these Twitter influencers that you see on YouTube, most of the time they are being paid by a prop firm to advertise the services, to lure the newer traders in, to then rinse them and repeat, take their money, etc. Whilst all these Twitter traders are flexing these big payouts. And not saying that they're not getting those payouts, but one thing all of these prop firms offer is a scaling plan. Now, no, I have not seen a single trader yet flex their scaling plan. Anyone can hit a big payout. You get so much margin on there, it's not impressive anymore. We've all become numb to it. Everyone's hit a big payout. It's just not a big deal anymore, so don't get lured into that. The real key here is sustainability. Even with these small accounts, if you build that up slowly over the time, couple of years, 3, 5, 10 years, you're trading this small account into a slightly larger one. You're going to build a track record. Now, with that track record, you can bring that to investors. You can bring that to real prop firms that will hire you, give you real capital to trade with. And if you walked in there into a prop firm saying that you trade all these smart money concepts and you've got all these payouts with these prop firms, they're not going to touch you. They're really not, to be honest with you. You need some sort of real track record that these prop firms just can't offer you these payouts enough, and these certificates are just to make it look professional. Don't get lured by it. You can do this yourself, and I'm going to show you every step of the way. You're going to have full access to my trading journal, which we'll jump into right now. Edgewonk. This is the journal you'll have full access to. Brilliant features on this journal. Well worth the money. I think I pay about £200 a year to have that access to this. Or you can only buy a yearly subscription, unfortunately, but it's well worth it. It pays itself. The data, I won't go into the reports just yet, because as you can see, there's only 6 trades that I've taken this month. I'll probably do the data at the end of next month, just so there's a bit more. I can spend a little bit more time going through it with a fine tooth comb. But as you can see here, let's just hop into the journal and see what we've logged. The very first trade here was an AUD USD long. So when I entered the trade, so you got your date, you got the time you entered the trade, the watch list here. This is everything that I trade, nothing more, nothing less. The setup, so I've got a higher time frame, supply and demand level. I'll go through that shortly. These are AI generated higher time frame, supply and demand levels in a daily time frame. Almost, it kind of works in a way like you just expect a reaction in the market when the price reaches these levels, but I'll go into some more detail in just a second. And we've got the liquidity pool. Now, liquidity pool is literally, let me just find an example here on G. I'm not in this trade at the moment because it's CPI today, but I would have been in this trade if that scenario weren't unfolding. So here you can see you've got a clear double bottom on the hourly and the 4-hour time frame. Now, what I would do is you look for a nice bit of space between that. This is the perfect double bottom that I'd be looking for. I'd be looking for a move away, chop down. Even better if it comes close to that market. It comes back down and then it goes up again straight into the shooting star, or the next level possible to trade above market. Really aggressive with these trades. Because once you've got that daily directional bias, you just want to hit it and you want to be in that trade to take that out. This is a 5-hour trade. Shame it's CPI today, but I don't trade news events. CPI, interest rates and NFP are the only 3 days that I don't trade. I find CPI a lot more aggressive than the NFP news. last coming year or so. So I like to avoid that one. I see many blown accounts because of that. Now, long direction. Here you put your entry price, the quantity, that's a 0.02 lot. Now, this isn't life-changing money like I spoke about earlier, but it will compound over time, and we'll see this lot size grow significantly, which I'm looking forward to. Some notes about the trades. Really good entry. I found a 4-hour naked candle close to the 50% fib level. I used to increase the short liquidity building up to push for the double top. Now, if I go into the advanced trade section, here you can set these to whatever you want to put in that's suitable for your style of trading. These are emotional indicators essentially. So is it a valid trade? Was the market entered too early or late? Was you being impulsive? Was it an invalid trade entirely? Was it outside of your trading plan? Or did you make an emotional mistake there? So it's good to keep track of that. Trade hit take profit, trade hit stop loss. Did I emotionally exit the trade? Did I panic? Did, for whatever reason, did I take my profits early? Did I get out the trade too early even though it's in a drawdown but there's no signal to get out? Highest price that the market went, and the lowest price, how close did that come to your stop loss? Really good data to take there. Was TP hit? Yes. Break even? Irrelevant. Custom, what I'm looking to get into the trade, so no higher time frame supply and demand level, no ATR, higher time frame fib level, no key support resistant levels, and there was no daily or weekly bias. Now ATR is the only indicator that I use to trade, and I barely even use it, to be honest with you. So what this indicator does, as you can see here, that's the top side of the daily ATR, this is the bottom side. So this range is what you're expecting the market to move in within these 24 hours of the trading day. Let me see. Oh, so ATR has already been hit. Okay, the ATR just moved there. Maybe that was a bug. Yeah, ATR. Let me see if I can find one that's close. Yeah, let's use USD-JPY, sorry, AUD-JPY. So we're nearly at the end of the daily ATR. You wouldn't want to place a long position prior to that, especially we're 11:49 in the morning today. Although we've got CPI news coming out, so if we did burst through this during CPI news, this ATR becomes irrelevant because it's not a normal trading day. But this is just an average range that the market will move in any given day in the past 24 trading days. So something just to keep an eye on. If you're getting close to that ATR and you're looking to get into that direction, you most likely want to avoid it. It's really good for fading the moves. So say for example, price came up into ATR and there was a really good level there that I was looking to trade. Extra confirmation for me. I know everyone's just going to be going balls deep long there, and I'll be looking to short and fade that move. So moving on to the trading session, this was placed in the New York time zone. I only trade London and New York. It was a 1-to-2 risk reward ratio, and AI confirmation. Now retail traders were trading at least 65% in the opposite direction that I was looking to trade, which is really important. You want to look at this as a signal of liquidity in the market. Retail position crossover, so that just means the retail positions were once they were short and now they switched to long positions. AI prediction is also in my direction, and the COT, that's the asset managers, they weren't trading in my direction, but this is a very quick trade. So moving into the screenshots here, and I'll explain all of that slightly better. So here, got a lovely naked candle here. Now I look to lean on these levels of the naked untested candles to make my entries with my stop loss place under that frost candle there. Now the naked level is important to me because I find this is where the market is most likely going to gravitate towards, and it sits even better when that's aligned with a 50% fib level. Now the fib levels, again, they're just an indicator. They're not to be used to enter or exit. Say for example, if I placed my entry bang on that 50% fib, I would have missed my fill and missed this entire trade. But here you can see above market we've got lovely double top. It's actually possibly even a triple top, to be honest with you. And then the market came down. We rejected this demand level that was below market when the price was up here. We came down. Everyone is now thinking they need to get balls deep short. That's why I was getting long here, looking to take out the stop losses above market in that direction. Now, just to go over the data that I use for my technical analysis. Top left here, we can see the supply and demand areas. Now, I only mark the last two relevant ones on my chart just so it's not messy. Now here below that we can see the AUD USD retail traders were 71% short in that market. So after this move, everyone was getting short whilst I was looking to get long. Really important. And now I need this to be at least 65% in my direction, opposite of my direction I should say, before I make my trade. The AI pattern prediction, that was also predicted for a short-term move the next couple of days going up as well. Rarely rely on this. Quite often it can be inaccurate, and I like to not base my trade on a completely AI generated level. I like to have my own fundamental basis behind it as well. And similar to the retail traders, we've got the asset leveraged managers money here in this direction. They mostly swing trade, position trade, so they're currently short the market, so they'll be down bad today, but it all works out in the end. If they're long-term traders, it is what it is. And this is how the trade panned out. Now, perfect to a T. I scaled into this trade. I made a mistake with scaling into this one. So here, I would have seen a lovely hammer candle that was untested, bang on the 38.2% fib, that I would have had a pending order for a long position with a much better RR on it, but I missed that, to be honest with you. It's just a mistake that I need to actually fill in my journal for on the monthly end review. It's a lovely trade, managed perfectly. I just messed up a little bit on the second scaling position there, but let's see if I can go for a couple more trades here just to give you a bit of an idea. Euro USD, let's go through this one. Same again. This was a levels trade. So here you can see 1, 2, 3 touches on that chart. Bang, getting on that naked candle that hasn't been tested here on the 4-hour chart. We're sitting on the demand zone. It's supply zone that's now turned into demand, because we've come back up and we've retested it. Now these supply and demand levels, these pink boxes, they are almost like support and resistance. Once they break, say here this would have been a demand zone, as you can see. Price came into it, we moved away very, very nicely, and then we came back down. We broke it completely. We come back, we retested it. That's now a supply level once we sold off here. Exactly like how support will get broken, retested, it's now resistance. Similar scenario, but I just like to have these marked out on top of where I lay my own personal support and resistance as well. It's just nice to see some points in the market where you're expecting a reaction moving forward. Now the FTA that I've got marked out, that's the first trouble area of the market. So I like to trade level to level usually. I like to get in the trades, out the trades, and then reassess what to do next, and get in again if I need to. So I trade level to level, place my order below market, next level above market where I'm expecting markets, some sort of reaction from the market. And let's see how this one played out as well. Bang, perfectly, but a little bit of drawdown there. Probably could have got in on that last naked candle, but I wasn't too sure about that one, to be honest with you. So I just put that in the most sensible area that I thought best. Same with the AI data, we've got 73% position in the short side of the market, so they were laughing and winning here, and then that quickly turned against them and everyone got stopped out of the market. Again, the AI prediction, that was also up for the day on that one as well. But yeah, lovely trade all in all. I mean, moving forward, I will be going into detail before I enter the market, as I'm entering the market, and what I'm doing in regards to the management during the trade of the market and how I'm handling my emotions as well. I mean, I've been in this for 10 years, and I still feel emotional. Like, if my trade is £1,000 up, and then I'm down 500 quid, I've just lost that grand plus 500 more, I feel that. I'm human as well. I do feel that. Just because I've been in this game for a decade now doesn't mean that I'm not aware that I'm losing money. I just understand the process moving forward. And a great thing about trading these small accounts and doing these challenges is you're not looking to make money in the start. It sounds absolutely stupid and completely against everything that you should be doing, but your goal here is to create good trades, and good trades then follow good money. I mean, I've taken one loss this month, and this is an invalid trade, to be honest with you. I was just feeling hot after my 1, 2, 3, 4 win streak. I took it now, got humbled, and then was back business as usual, looking for that good setup again. So just going to hop onto my MT4 and just show you what I use to place my trades and some tools I use over there as well. So let's take a look at that quickly. Lovely. So this is my MT4 account. This is where business happens. So as you can see, the elephant in the room, I've got this risk management tool here that I live and die by. Now, I've got one that I coded previously just for MT4 that isn't as good as this. This has got slightly some more features on here that one of my friends created. But the one that I coded and I created, I'll be looking to give that out on this channel as well shortly. Once you join a Discord, etc., it'll all be in there, as well as some trading journals. But this one's got some really good features on there. So I risk 2% per trade of my balance. So how I usually trade pending orders as well, unless the market is right where I am looking to trade. So I'd create a pending order. So my pending order would have been here. My target would have been down here, and my stop loss would have been above that candle there. Now, execute, confirm. Wait for a sec. Oh, something's moved here. There we go. So if I press confirm, bang, that order's now in the market, ready for that to be filled. Obviously, I'm going to delete this now because CPI is coming out in about an hour and a half. So I want to avoid being in the market at all. So I might take a look after CPI to see if anything sets up. But this is generally what I'm using on my day-to-day basis. So markets I'm trading is AUD USD, Euro USD, Pound USD, GJ, one of my absolute favourites. Killer trade on that this month. Really volatile pair, love it. CAD JPY, haven't had any trades on that this month, to be honest with you. Euro JPY, another lovely market. Look at these candles, it's absolutely unbelievable. Love the Japanese pairs. USD JPY, also a solid one, love that. USD JPY, it tends to be a little bit choppy. As you can see, it's more of a slow up-down moving pair. It has some good moves now and then, but usually what I find is, although the pairs that I'm trading here are mostly the same, I don't trade any of them at the same time. I only have one trade open at a time, most importantly, where all of these are correlated. But usually if something is setting up in the USD markets, there's going to be one of these three that offers the best opportunity with the best looking price action. Same with the JPY pairs. There's going to be one of them that fills and the rest of the orders will get deleted, or one of them that just looks the best out of the lot. So it's nice to keep an eye on all of those. Looking forward to giving just the full access of what I'm doing, my day-to-day trading. Really good videos coming up as well. I've got a video coming out soon where I'll go over what I've learned with spending $60,000 on prop firm funding. So that's an interesting one to keep an eye out for. But yeah, hopefully you've learned something today. Hopefully you will learn some stuff in the future as well, and follow along the journey, and I'll be in touch soon. So yeah, take care, have a good one.